InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, we interview Narbe Alexandrian, President and CEO of Riv Capital Incorporated, trading on the CSE as RIV and the OTC as CNPOF, where we discuss the company's transition from being Canopy Rivers to Riv Capital, the company's recent news and investments, as well as the investment opportunities being noticed right now in the U.S. cannabis space. So today I'm talking with Narbe Alexandrian, who is the president and CEO of Riv Capital. Narbe, it's great to talk to you again. We've spoken before. The last time we talked, Riv Capital was Canopy Rivers. So maybe can you talk a little bit about that transition and sort of where you guys are over the last year or so, especially with the focus on the U.S.?
Yeah, thanks for having me. Really happy to be back. Maybe I can take a step back and get started with what Riv Capital started as, and then what it became. So Riv Capital started as Canopy Rivers in 2017. At the time, we were the venture capital arm of Canopy Growth. By late 2017, we spun off to become our own entity, but we're still controlled by Canopy Growth through multiple voting shares. I joined in the summer of 2018. We took the company public in fall of 2018. By January 2019, I was promoted to president and then CEO by May of 2019. So we're fast forwarding to May of 2019, where and in my new role, everything that I was seeing was pointing us to the U.S. market. The market is huge. It was underserved. There was a lot of stigma attached to the federal illegality of what you could do there. So I was just trying everything that we could to get more U.S. exposure before anybody was really talking about U.S. exposure. However, at the time, we weren't allowed to go there because of Canopy Growth ties to the legalization issues in the U.S. or Constellation's exchanges or bankers. So over the next 18 months, we worked our butts off to really clean up shop, unwinding deals and structures that were made while working on a deal to get us to the U.S. market. So in December 2020, and we closed this in late February 2021, we sold the interest in 3 of our portfolio companies to Canopy Growth at closing, it was $380 million Canadian in consideration. Part of that was cash. Part of that was Canopy Growth shares. We used a portion of that to buy out Canopy Growth's position, and another portion of that to pay off a liability that I inherited from my predecessors. So with a chunk of cash, no control over us, we could finally get to the U.S. market. And as we were looking at targets and looking at making those acquisitions and investments, Scott's Miracle-Gro reached out to us and we started discussing again. And then that led up to the strategic investment that they made from their end.
Okay, so you touched on something that I want to get into right away, which is obviously the focus on the U.S. market. It's a big thing that a lot of people, that's where most of the news is sort of putting the cannabis attention today. A lot of speculation over the last couple of years of when federal reform might be changing in the U.S. What specifically was sort of the main thing that had you realizing U.S. interest needed to be sort of a priority over focusing on the Canadian market? And then sort of now that you have had this fairly large partnership with Scott's Miracle-Gro, sort of what do you see, or which areas maybe of the U.S. market do you see have the most potential at the moment?
Yeah, so to answer your first question, I mean, the U.S. market itself is an extremely attractive market to go after. The population size, the propensity of cannabis consumption, the penetration rate that we're seeing, the age groups that are touching the plant and actually using the product, how entrenched the legacy or illicit market has been. These are all attributes that we point to when we look at the market. And any mature CPG market, the U.S. represents about 40% of that market size. So that's no different in the cannabis world either. At the same time, the federal illegality of it means that there's risk attached to it, and when there's risk, there's opportunity. When there's opportunity, there's an ability to make a financial return as well as to build something strategically up until the point where the stigma goes away and it becomes a bit what it looks like in Canada in terms of the legalization there. So I can point to countless data points to show why the U.S. market was so attractive and continues to be attractive today. In terms of what we're looking at, I mean, the US market is extremely fragmented. You have states operating very differently from other states, even around each other. And then if you go down to the municipal level, there's municipalities that have pushed back on bringing cannabis into it, and other municipalities that have opened their arms up to higher employment, tax revenue, and just building a supply chain that one can control from a government perspective. So when we're looking at where we're investing our next dollars into the U.S. market, our focus right now is to go after those limited license states. So the states where there are only 10 or 20 licenses that are given out. How can we get in there early, build a first mover advantage, get in front of the consumer, really gain the trust of the consumer, and take all the learnings that we've seen from the U.S. market and the Canadian market to make sure that we get to hold on to the consumer as things open up, and as the market moves away from supply and more to demand.
So one of the things you touched on there that I found interesting was just talking about some of the sort of retail metrics of the U.S. market, specific sales demographics, specific consumers, and market penetration. Does that differ that intensely from the Canadian market, or is it just size? As far as actual customer preferences and everything, are you noticing that, something that would sell well in Canada is not selling well in the US, vice versa? From what I've seen, it seems fairly similar, or is that wrong?
It seems fairly similar. There are instances where you do see a higher penetration rate. Take beverages, for example, in Canada versus what you're seeing in the US. And it's just because the way that the retail network is developed in the US market, it's just a bit more difficult to get a retailer to install a fridge, to put drinks into it and sell it like you're doing in Canada, which is much more of a push towards being a beer model than it is just being a cannabis beverage model. So it's not so much on the R&D side of what are the products being produced that are very different. I think the US definitely has a leg up on Canada because of the restrictions in Canada from Health Canada. In the US, you can make these huge 5-gram blunts in California. You can't do that in Canada. But it's not like there's no trade secret around it, really. But it's a method of distribution and delivery, which you do find that there's differences between Canada and the US market.
Okay. So yeah, obviously a lot of people have been talking about, or there's a lot of momentum behind the sort of limited license states in the US. And I do think as well, what I find it interesting looking at the US is it's a very good canary in the coal mine for how this industry could expand internationally. When you look at each sort of different state, and sort of how the newer states that are coming on board now that maybe are just starting recreational or advancing their medical tend to be reaping most of the advantages of previous states before them. Are you noticing that, I guess, you mentioned the risk of this industry. Is there that much risk in entering into these states at the moment, or what is the biggest risk that you need to consider? Is it still just banking issues or financing?
Yeah, I wouldn't even put those up there as the main risks. I think the biggest risk is regulatory risk. Every one of these states is sensitive to any major change in regulatory reform. So I'll give you an example. Right now, New York has 10 licenses, vertically integrated licenses that have been given out. These licenses give anybody the ability who has a license to cultivate, extract, process, manufacture, and create their own dispensaries to sell their product and hold on to some of that margin that they would have otherwise given away to a retailer in a different model. Now, each one of these licenses is worth a lot of money. Why? Because there's only 10, huge population size. New York is a giant state. But what happens if the government then comes and says, hey, we did 10, we understand the value chain, we understand the supply chain now, we're going to take that 10 and make it into 100. What happens to the value of each of these licenses? So from in that perspective, like you have to really stress test what does the world look like if each of these states turns into California or Canada, where you have unlimited licenses or too many licenses, you're competing against everybody else on price, on getting in front of the consumer, on what the consumer thinks of your product. And it's not just about, hey, I had the first license, so I get to operate here. And the cost becomes an issue. Like, what is the cultivation cost? What is the cost of selling it? Can you keep your operating costs down? And so whenever we look at these businesses, even though they're in a state that's limited license, and yes, you're going to reap the rewards for 3, 4, 5 years, let's stress test that these companies and say, what does it look like if things change and you look more like California than you do New York? And can you survive? And can you pivot? And what would you do that's different? And I know that not all the answers are present, because it is more of a hypothesis. We're playing around with what could become, but you want to really understand in the operator's mind, how can they adjust to it? Or are they prepared for changes beyond what they're currently experiencing?
That's a really interesting point to bring up. And I would hope something a lot of these companies are paying attention to, because I do think that's the eventuality everyone needs to look at. Is this isn't an industry that's going to stay stagnant in any way. When you're looking at some of those sort of stress test factors for regulations changing, maybe on a federal level in the US, are there any sort of things, maybe in specific states, or you see one specific either recreational or medical model that looks like it will become sort of the standard for the US? Or are there any sort of states that you see are maybe going to be more difficult if there was some sort of federal reform that came, grand sweeping across the industry? I know some states you've seen, for instance, you mentioned California. When you compare some of the sort of due diligence it requires to set up a production facility in California versus maybe some other states, there are differences. Is that something that you consider, or is it now kind of pretty much up to par when you're looking at how most states sort of set up their business operations and looking for things like, for instance, there was a lot of talk about EU Gmp certification for a long time, which is very basic, but a lot of companies were ignoring it. Is that kind of becoming standardized, or is there one state that maybe stands out ahead with regulations?
Yeah, I wouldn't say GMP is becoming standardized. It should be. And I definitely do agree with you that over time, especially when the borders start opening up, you're going to want to see more GMP type facilities so that they can import, export between countries. If we take a step back, like the biggest catalysts that we're going to see is US federal legalization, which everyone talks about enough. Interstate commerce, which is going to, in my opinion, going to happen years after federal legalization is. And then globalization of cannabis at the end of the day, when we're going to see maturation. And that's going to be a whole host of other problems where hemp's going to already comes from all over the world, but cannabis is going to start coming from Colombia and Jamaica. And there's pros and cons to it. I'd love to try Jamaican cannabis. I'd love to try Colombian cannabis. But likewise, the costs are going to be different. So that's kind of very long term. If we go to the short term here, we've seen a lot of issues with how Canada rolled out legalization, and the way they rolled it out was before legalization even happened, before we understood what demand was in the consumer. The government out there was giving out licenses for grows. Get ready to grow the cannabis, go through the experience curve if you can. But you have to dump everything until legalization happens, or store it because you can't sell it at that point in time. And it was helpful to get some of these companies to understand how to plant the plant and to get to the experience curve, which takes about 3-4 harvests for any grower in any facility to really understand how the facility and the grow in an art form plays together. However, we didn't know what demand was in Canada. And what happened was everyone overbuilt, expecting federal legalization in the US, expecting Europe to take in the cannabis. And COVID was a bit of a black swan. But now everyone's holding their hands open and saying, shoot, we have all this facility space. We don't have enough demand in Canada. We have to shut it down. We have to drop jobs. And the model isn't working. And some of the US states took those mistakes and said, okay, we're going to learn from that. So take a state like Massachusetts, which is an extremely fragmented, limited license state where you can get a license. However, you can only have, I think, 3 dispensaries and up to 100,000 square foot of grow. But the way they did the cultivation space is you start off with a certain amount and you have to prove to the government by selling, I think it was 70% of product. You have to sell 70% of the product to move up a tier. And you can get to move up to the 100,000. So if you can't sell it, then you shouldn't be building the facility and you shouldn't be able to license to create too much cannabis. So that kind of puts a check and balance in terms of what supply and demand look like. And it might take a few years for that balance to really show, but we're not going to see huge facilities being built in a state like Massachusetts. And I like stuff like that. I like the small, intricate details that these regulators have looked at state by state to say, we don't want a situation like that where we make this thing legal. We convince all these people that our constituents that this is good for the state. And then 3 years later, we have to drop thousands of jobs because we screwed up on the way that we understood the supply chain. And you see these differences in state by state. Like in Florida, you can have a license and you can have as much as you want on that license. Hard to get a license, but you can build as much as you want. And if you're a new licensee there, that's a bit tough because you're up against the giant being Trulieve, and you're playing. One of an investor once told me, you're playing an away game when they're playing a home game on their home turf. And how can you beat that? And that's a different licensing regime out there as well. And then you have California, which is extremely great growers, great cultivators, a deep, deep, deep culture of cannabis for years and years and years. However, a lot of competition. So you have to really stand out. What are you doing differently? How are you talking to the consumer differently? And in a state like California, you're not seeing as much investment dollars going into grows as much as you are going to brands, because these brands are literally fighting off thousands of other brands to go to the top. So if you're one of the top 10, you have the talent, you have the distribution, you have the understanding of your consumer and your market, and you can really build a bigger business there.
Yeah. Touching on a lot of good points. I like the detail for each actual individual state. Not a lot of times when I ask those questions to actually get real sort of analysis of state by state. So I really appreciate that. So, I mean, you mentioned obviously the strategic investments of Scott's Miracle-Gro. I know that in the past with Canopy Rivers, there was still at least somewhat of a focus on, let's say the ancillary side of the industry of not going direct for the plant, but sort of the businesses that go around it. Is that still something that Riv Capital is going to be focusing on, or are you much more directly involved with the plant now when you're looking at U.S. investment?
Yeah, I mean, officially, we did say that we plan to acquire, invest in, launch, and or develop U.S. operators and brands across multiple attractive states to create a multi-state platform. That said, I think the first stage of that is to really find an operator, build the pipes within the U.S. market so that we have a strong operating team, a strong platform. And then beyond that, we can look at the rest of the value chain. We can look at doing minority investments. Not to say that's our focus right now, because it's absolutely not. Our focus right now is plant touching operating companies that have licenses in limited license states. But once we build that out, then we have the platform to plug in other things. So to answer your question in a shorter form, yes, we could look at ancillary. We still do talk to a lot of the companies that we used to follow back in the Canopy Rivers days as Riv Capital. However, the focus and the focus of the team, and the focus of our bandwidth is on acquisition of limited licensees.
I guess as well, how narrow is that field becoming now when you're looking at the U.S. landscape? Just because many of the states that, have we're going to build up a medical program or recreational program, most of them have now. There's still a few holdouts, obviously, but not in general. Most of the, there's a lot of large scale multi-state operators in the states now who have kind of pushed themselves into basically almost every market that they can exist in. Is there still a lot of room for I guess like new operators or new businesses, or is it mostly you're either in a niche, small scale sort of business position, or you're one of the big boys who's slowly just, moving across the board?
Yeah. So to take a step back, Taylor, like one of the things that we really wanted to do was create a unique platform. And we didn't want to just take our shell and sell it to someone else and just become one of the many small to medium sized SSOs or MSOs within the market. We want to create a unique story. And I really do think that the $150 million US strategic investment by Scott's Miracle-Gro really was the first step in showing the uniqueness of our platform. So we have about $325 million of US of available capital. So we have and taking some of the certain restrictions relating to those funds into account, we have a balance sheet that we can accelerate our strategy. And in some ways, we see ourselves developing an MSO, and it's easy to say we're developing an MSO, but in many other ways, what we want to do is develop an anti-MSO. I do think that similar to the Canadian market, a lot of companies took money when they needed to at very high cost of capital. And they have to really focus in on, overly focus on the financials of every decision that they make. And some of these companies, and not all of them, but some of them, have done a disservice to their consumer by focusing too much on how can I make money in as many states as I can versus how can I be the best that I can to my consumer. So I see this world within the cannabis space as being very early in the grand scheme of things. And our focus is on finding companies and operations that are extremely consumer obsessed, and not so much focus our efforts on what do the financials look like, because nobody really knows what 2022 sales or 2023 sales looks like. Everyone's guesstimating based off of a educated guess, but it is still a guess. So I can go into more depth on this, but I think it's way more than THC and terpenes here. It's about how to reach the right consumer, how to take away the friction of buying, how to take away the friction of educating yourself on what the differences are between the products, and how to speak to the consumer in a way that they want to hear it, without having too much emphasis on, hey, like, yeah, you don't understand terpenes and THC and how they all intertwine in the entourage effect. Why don't you take 3 hours to learn it? Nobody's going to do that, right? Like, how do we get in front of the consumer with as little friction as possible and give them what they want to see?
I guess, yeah. Are you able to go into a little more depth on what maybe some of the things you've seen so far are that would be maybe an example of that, of a great option where someone is really impacting consumer decisions? I've found that, you know, as someone who's worked in head shops and stuff as well, you know, if you're going to a dispensary right now, I don't know in the States, I think there's a little more salesmanship from a bud tender, but like Canadian market, you know, you could be any employee in there and you're not going to impact the overall sales that much. People look on their phone or internet, you know, an hour before. They usually just go by a few small factors and they come in there and purchase what they're purchasing without a lot of impact from the bud tender or the person behind the counter because of what they're allowed to say, etc. And I know as well in the States, you're going to have the difference of, unfortunately, there's a huge difference between state by state regulations. So maybe you have staff in one area that could work that doesn't work in the next state, right? That doesn't give you the same sort of consumer experience. So I guess, yeah, how does that, what are you noticing is a great way to actually lower some of those barriers for a newer customer or for someone who actually, you know, wants to be sold something?
Yeah, so I'll take an adage from the tech industry because that's where I came from prior to cannabis. And if you have a company like Netflix where the product isn't complex to use, the price isn't very high, the whole structure of how you develop that sales model is all self-service. You don't have people standing and calling people and saying, hey, you should use Netflix, you should use Netflix. The same thing applies to the cannabis industry. If you see customers coming into the cannabis and into the shop, they're not going to spend 3 hours trying to understand the different brands and what each of the different things can do. Some people might do that, of course, but we're talking about the masses here, and they won't do that. They want to come in, find something they like, and walk out, right? So that right now, the bud tender in many states, as well as in Canada, their focus is of how do I convert this would-be consumer into a consumer to buy high-margin products that I can sell. And that works to a certain point, but there is friction. People don't like talking about cannabis, especially if they're brand new to it. They're just uncomfortable talking to someone. They feel naive when they're walking in because they haven't really touched the plant as much as the bud tender has. And in some, we've seen some terrible retail locations where it's not accommodating to someone that's new to it or someone that wants to jump back into it, an intender or even a rejecter. And that's how we break down the archetypes of the consumer. And then, so then let's look at California, because California is an unlicensed, an unlimited license state. You have many competitors out there. What do? Do they rely on bud tenders as much? I mean, they do, but more and more you're seeing companies come out that are just hyper focused on exactly what they want to deliver to the consumer. So if you want to go buy a cannabis dry flower or tincture or edible to help you sleep, then there is a product that says sleep on it. And if you want to find something that helps you with just relaxing and watching TV, then there's something there as well. If there's something that you want for social, there's something there. If you want something for creativity, there's a brand there as well. And these brands are hyper-focused in the sense that they're not trying to be everything to everyone. They're not trying to leave the education and the friction to the consumer to understand why my product is different from any of the other products. They're saying, hey, you have this one use case that you want to use this cannabis for. I'll give you the use case you use it for. Can you use it for other stuff? Sure, but that's not what I'm selling. I'm selling you something for creativity. You want to write a report? Here is what you can use for that. And this is what it's meant for. And the better we get at marketing that, the better we get at getting in front of the consumer with that, the more the consumer can understand the differences between the products. And the closer we get to that Big Mac effect, which is you get to experience the same experience every single time with the same product. And that's the path to loyalty, consumer loyalty.
So you somewhat touched on it there, but when you are looking at specifically branding, do you think that is where it's all going to land then, is instead of focusing as much on specific strains or on, again, having those beautiful terpene charts or any of the other things that I know a lot of people just look at for a second and then ignore? Is it going to be more of a, you're coming in, give me 4 sleep pre-rolls, give me 5 relaxed beverages, et cetera. And that's just, relaxed by such and such a company. Is that more where you see the effective branding is going to actually be impactful to a consumer?
I think so. Not to take away from the terpene profiles and getting deep into strains, because I do think there is a large group of people, a niche, but it's a large niche that love that type of stuff and love understanding it. But for the mass consumer, they don't have the time to do that. Like, they don't have the time to do the research they need to on COVID vaccines and what's going on at work, let alone to give them the opportunity to spend hours trying to understand a single product and the many, many products that they consume in a day. So I think we'll get closer and closer to that of having those hyper-focused use cases. And of course, there's going to be brands out there as well, similar to the alcohol and tobacco world back a few decades ago, where celebrities are going to have an influence on what you buy. And there's going to be that social status that, hey, I'm using something that Snoop Dogg or Drake or whoever it is has their brand, and look at me on Instagram. We're gonna have that type of stuff as well. That's not going to go away. There's so many different ways you can cut it and show it, but I think that there's a huge need in many U.S. markets of that hyper-focused consumer product.
You mentioned as well, obviously coming from a technology background, how much does that play into your sort of decision making when it comes to investing or focusing on a company you're going to work with? Is how sort of on the ball they are with the current technology side of this industry? Is that something you're kind of looking to provide or like you could give knowledge about, or is it you want them to come well prepared? They better have, a very built out online platform. If they're a dispensary, they better have delivery, et cetera, all that ready to go.
It really depends state by state, because in some states you can do all these things, in other states you can't. You just have to follow the model that they're given. But say that you're in a state where technology is open and you can use LeafLink for marketplaces and Dutchy for e-commerce, like all these things, definitely, like you definitely need to be up with it, because I think it was a competitive advantage a year ago. I think now it's just table stakes with what happened with COVID. Like if you don't have a digital presence in a state that allows you to have a digital presence, like how are you competing with anybody else out there? And it's not hard. Like these technology companies, and I know the guys at Dutchy and LeafLink very well. They make it extremely easy to onboard consumers because they want to take the friction away. And that this is like what technology is all about, taking friction away with whatever product you develop.
Fair enough. So I guess just in final thoughts, looking at the US again, there's, been endless talk about what regulations are actually going to change on a federal level. Again, I've seen a million articles about the different acts that everyone's looking to go through, States Act, MORE Act, SAFE Act, et cetera. Is there any real expectation now. I think that maybe some of the hype has died down with the earliness of the Biden administration. Obviously, you're getting close to that, I guess 8 months, 7 months in. What's sort of the more realistic sentiment or time frame that you're seeing now in the industry as far as when people can expect some sort of change, or what sort of change they might be expecting?
Yeah, so I think the SAFE Act is something that everyone's focused in on. However, I do follow the news about what legislation is going to come out on a federal level, and I think it's very important. I think if you take a look at social injustice and how to fix that, social equality and how to fix that, and then you look at the 280E situation with taxation, which is drowning a lot of companies, and just some of the negative effects of prohibition that have impacted, and how we can kind of peel that away. I think that's super important, and we follow it all the time. But I think when you look at the grand scheme of things, we're pushing towards federal legalization. The biggest catalyst is every state, one by one, legalizing it for medical or recreational use. And that's going to be the catalyst that moves this thing to federal legalization, because right now we have 30 something states for medically. We have in the teens in terms of recreationally. If we can get the rec side to get up there, and we get close to 50 of the states, then there's no question that the federal government will have to switch its stance on it and push towards federal legalization. That is the biggest catalyst, when you have the states one by one knocking on the door on the federal government and saying, what's going on? It's legal everywhere, but we can't talk state by state. We need some federal backing here. Let's fix this thing. And I think that's going to happen. And my pick is that we're probably going to see legalization in 3 to 5 years within the US, like actual implementation of it. So we can do all the talking and planning and this date and that date in the future, but 3 to 5 years is when I see it actually come out live.
So do you expect then that it'd be the bigger catalyst for more states to go recreational, or for the final holdouts to get their medical?
So the medical, like we've already I think it's like 34 states are medical right now, and that hasn't really moved the needle as much as we wanted to. I think recreational is when we start seeing that change. And just better medical reform. So in a lot of states, like the amount of friction involved in trying to get a license and trying to get in front of a doctor and trying to get in front of a dispensary, it's not that easy. So they might have a medical system, but it does deter people to get into it because of the amount of hoops that they have to jump into, let alone the laws around working while consuming cannabis and drug tests and so forth. So that all needs to be cleared up. This isn't going to be something that happens radically. This isn't something that's going to happen overnight or in the first year of administration or in the first 2 years of administration. These things, these broad changes happen incrementally. And I think everyone needs to understand that similar to social rights, civil rights, etc., nothing happened overnight. It happens over years and years and years. And it just chips away at the problem until we get closer and closer to the solution. In some situations, we never get to the solution. But I think here we're going to get to something that we're all going to like within that 3 to 5 year time frame.
Well, thank you so much for that insight, Nick, and really appreciated the talk today. And you gave a lot of good in-depth sort of discussion about the market. So I really, really appreciate your time.
Thanks for having me. Really, really happy to be here.
Once again, that was Narbe Alexandrian, President and CEO of Riv Capital Incorporated, trading on the CSE as RIV and the OTC as CNPOF. To find out more information about Riv Capital, you can click the links attached in the article or visit their website at rivcapital.com. That's all for today's podcast. Enjoy the rest of your weekend. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM Certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law.
Our site does not possess, distribute, or sell cannabis products.